the issue is much bigger things are at play here than just supply and demand in energy. So the key for me in my business we're up to like 1,700 partners now. The key for me is we're looking at 9 oil basins in the United States contain the majority of the crude oil and natural gas. Those that own the natural resources, the mineral rights, they're like everybody else. They're trading and selling those minerals as they become more fungible. Whoever owns those, you will own the rights in perpetuity forever, the oil and gas in that minerals, and it can last 100 plus years. So to me, it's like it's a very limited amount of quantity of oil and gas saturated minerals. It is going to be something that lasts for decades and decades, but it is evolving where they're coming less and less, but higher in value as a result of the barrier to entry. So it's a really unique market, but it scares the heck out of most investors. They just don't get it, and I understand, but it is an asset class all into itself.
So let's talk about the different ways that individuals could invest in oil and gas and mineral rights and all these different things. Because I think where a lot of people, where the risky drivers in the industry steer people is they steer them to, these new wells that they're going to drill, these new, pretty much like, here, we know there's oil here. We're just going to drill for it and we're going to strike it and you guys are all going to get rich. And then they never hit or they never even get started for one reason or the other, but they sell the promise of tax deductions. Your industry is very unique because it is one of the few that has tax deductions. Correct me if I'm wrong, please, because I'm not an expert in oil and gas, but it is one of the few industries where, let's say somebody exits a large real estate complex and they make a huge profit. While the 1035s are still around and the money can be exchanged, they can exchange into these types of projects, specific ones, legally. Instead, you don't have to move it into another real estate deal and buy it at the highest point. You could move it into what you do, which I think is fascinating. And I think it is there's so little information out there about this.
Yeah, we were quite shocked at how many investors did not know you could do a 1031 tax exchange.
Or 1031, I'm sorry.
It's like 1031 traditional real estate into minerals, because most people don't know that mineral rights are truly deeded property. Mineral rights are deeded property severed from the surface, and you file them, you deed them, you record them, and they're yours just like a surface piece of property, right? But we saw that being recognized a little more in the last 36 months as everybody was trying to exit at the top, dumping those high-priced real estate, scraping that profit. They were like, but I don't want to buy somebody else's high piece of property. So through education, podcasts, and information being out there, we've had a number of partners put in significant money from 1031 exchanges. And that's really, really good to exchange from traditional real estate into minerals, because minerals are like being a triple net landlord. I don't have to have any cost, any exposure, zero liability, zero capital, but I get a check every single month from the oil and gas sold off my minerals. So it has such similar factors of importance that these investors can relate to it. And it has really made a lot of investors say, this is not only a viable asset class, it's a desired asset class, which has been why we can hardly keep any minerals available, because they keep getting sold out so fast.
Yeah. And I think a couple of the folks listening, their ears perked up because you said one thing, you said income. So that's a thing that a lot of people maybe don't understand that I really want to hit. The mineral rights basically in perpetuity. So you all understand that there's oil in the ground. They've got producing, wells that are pumping oil, producing income that you can tap into. And here's the most fascinating thing I recently learned. Again, not an expert in this, but when one starts to kind of produce a little bit less, a lot of times they can just go sideways and then they just find another one and another and another, and they just turn them on. And it's all within that same piece of property. And so it's almost it just keeps going. It just keeps flowing income. How consistent is the income when it comes to this line of work?
So think about these new oil and gas wells like having a case of 3-liter Cokes. In the old days with vertical wells, it'd be like getting small 16-ounce Cokes. You pop the lid off, pressure comes out, Coke fizzes to the surface. That's what we were drilling. We were drilling thousands of little bitty vertical wells that might have 100,000 barrels of oil in it, but you get back a ton of the initial oil in the first 2 or 3 years, then it go dry after 7 or 8 years. So we were just on a treadmill. Today, the horizontal wells have the same concept. They're loaded, they're full, but I have the much broader opening at the top of a 3-liter Coke. And when it surges or produces in the first 2 years, we can make 45 to 100% of our money back in the first 24 months. Now, why that's relevant is you still have 85% of the reserves left in the ground. So the key question that got really removed about 15 years ago is you didn't have to go to an Exxon meeting or a large oil companies meeting and say, What's our percentage of dry holes? Because you're hitting 99% of successful wells. The only wells that don't work, you might have a mechanical issue. Other than that, you're making a well every time. But and I'm going to give you a number that's going to blow you away a little bit. So like we're mainly in Oklahoma, and these geologists, geophysicists, they'll come in and say, look, in the northern part of the Anadarko Basin, Oklahoma, there's 50 million barrels of oil equivalent per square mile. That's 640 acres, right? When you get a little further south, this thing is like a modern day Grand Canyon. You get further south, it's as much as 250 million barrels of oil equivalent per square mile. So the difference between today and tomorrow is using today's technology, commodity price, and the cost to drill, we can only get out 6% of what's in place. But over the next 30 years, we might get 8, 10, 12, 15%. And that's what makes it so exciting is, you're right, you drill a well, it declines, economics come back, engineer comes back, geologist come back and says, we thought we could only get 400,000 barrels out of 2 wells. It looks like we really get 500,000 barrels, but we have 12 wells to drill. And we found another zone. So the idea for this country is that technology, which we're always on the cusp edge of creating, the fact that we're entrepreneurs means we're willing to take risks, which caused the discovery of these horizontal wells, has allowed us to access these oil-rich basins. And like I always tell my clients, we're barely in the first inning of a 9-inning ball game, because the fact is what we're doing today is so much better than what we did 3 years ago. And what we'll do in 3 years from today will be much better than what we're doing today. It's just better and better, improved wells, better recovery. And that's the advantage. We have cutting edge technology helping us drill wells where before we were just hoping we hit 5 out of 10.
That's fantastic. And again, back to the income, because of what you just said, if someone invests in this and they're looking for income, let's say they're getting ready to retire, they're seeing the stock market, we just broke all-time highs, touched all-time highs today alone. It blows my mind that we could even do that in an economy that is absolutely not strong, and in a market that is so overly manipulated and speculative that I can't believe the average person can't see that. I mean, the Magnificent Seven should tell everybody what that means in the S&P, but people are looking for exits out of the stock market, just like they're exiting out of real estate, because you're at all-time highs. Warren Buffett said it, buy low, sell high. So they need that money to go somewhere. But a lot of these folks are looking to retire and they need steady, predictable, consistent income. Is oil that, or is the mineral rights that?
Yeah, what I do, Chris, I tell partners this way: look, you're buying a mineral interest that's going to have a well on it. The well will have less oil and gas in that reservoir tomorrow than it had today because you took some out of it, right? It's the only natural resource on the planet that when you burn a barrel of oil, it's never going to be another barrel of oil. You pull out gold or silver, it's still there. It's just in a different format. So because of that, you're going to have this decline curve, but you're sitting on a mountain of oil and gas, so new wells will increase that decline, increase that revenue. But what I tell clients to make it easy is, if you could take $1 million and go buy a bunch of rent houses, and those rent houses generated enough revenue, you had your $1 million back in 5 years, do you care that it's on a decline of rent if you know from the 5th year forward it's all 100% return? It'll last for 25 to 100 years without any capital cost or exposure or any risk? And every answer I get is, well, hell, I do that all day long. I do as many of those as I could. Well, that's minerals. The way we look at minerals is, if you buy them the way we do, you buy them, you look for an 11 to 20% cash on cash return. We hope we get 100% of our capital back in the first 60 months, okay, maybe 72 months. After that, I've got my money back, and I've got these mineral producing assets with passive income. I get 12 checks a year and a 1099. It's the simplest, most passive investment out there, but they'll last for 25 to 100 years. That is what makes it so appealing. And I got to tell you this story, because when you've been doing something like I have for almost 40 years, and you start off drilling high risk oil wells back in the 80s and 90s, what I've heard in the last year, it literally almost brings tears to my eye when I talk about this, because I've had clients come in and say, Troy, I've retired because of you. I had a partner tell me last week at our fall dinner, he said, look, I got to tell you, I started with you 3 years ago when oil was $40 a barrel. We have so much income every month coming from your minerals that you put us into. We don't touch my wife's retirement. We don't touch our Social Security. We don't touch our other assets. We're living our lifestyle and better off just the income every single month we get from your minerals. Never in our lifetime do we think we'd be in this position. It's because of what you did for us. Now, to me, that's my driver. If I make my clients successful, I'm going to be successful. If I put my clients first, I'm going to be right along with them for that successful ride. And minerals, I'm telling you, I have sold a ton of my own other assets outside oil and gas to put more money in minerals, because I'm in the same boat. I'll be 60 this year. I don't want to hear about the toilet and the wind damage and the property tax. I just want to check every month. And it's just fantastic. This opportunity now is available to high net worth investors, because it wasn't 10 years ago. It literally wasn't.
So define high net worth individuals. So like people that would be looking at this as an opportunity. Like, is it who is it? Is it 50,000, 100,000? Like, where do they need to be investing with you in this?
Well, if you have a client if you have an investor that's probably sub $2 million, they probably need to go buy minerals and publicly traded stock companies that trade in minerals. And the reason that is that you can't build a brick house if you can afford only one brick, right? My view is energy is not what I call a drive-by investment. It's like Vegas. You're playing a great game of blackjack. Somebody comes in and messes your game up, throws $100 in, right? That's a drive-by investment. This is not something you go, well, let me try 25 grand. I'll do another one in a year from now. You may win and you may have a good result from doing that, but you're really not doing what's necessary to build a strong net worth and portfolio. Every investment you have is directly responsive to what energy prices do. Donald Trump did not help the oil industry in his last year during COVID because he liked $55 oil. Cheap oil, strong economy. High oil, bad economy. So the truth is, if I want to balance in my portfolio, I better have oil and gas directly in my portfolio to offset what's going to happen in the rest of my investments. But if you look at the income side of it, how do I look at income if I'm trying to retire, sell my business, or create that passive income source that not only lets me live my lifestyle, but refuels my battery so I can invest in other assets? Well, I want to go buy minerals with tenants. You're the landlord as a mineral tenants like Exxon, Chevron, Occidental, et cetera, that are going to go spend hundreds of millions of dollars to drill wells on your property for free. And by legal statute, they've got to pay the royalty owner, the mineral owner, first every single month for every drop of oil and every molecule of gas. What other asset do I have billion-dollar tenants like that pay me first every single month for the next 25 to 100 years? It does not exist. The biggest question I get, Chris, is what goes wrong? What can happen wrong? And the answer is, I'm Leo DiCaprio and Catch Me If You Can. I'm a crook, I'm a liar, I'm a Ponzi scheme guy, right? That's first. Second, I'm just a complete moron idiot. I don't know where to buy minerals, right? And the only other third risk I can think of is some mad scientist comes up with a little pill, drops in a glass of water, and goes, that turned into energy I can burn in my car. So some kind of unknown energy source can replace oil and gas. Again, it can't fabricate what's behind me, but it might replace transportation. So that's really your three risks. And I think we're at about $650 million of minerals that we've acquired in the last 36, 40 months. We're going to cash flow about $65 million free cash flow this year. No fees, no back ends, no reversionary. Next year, we'll generate about 100 to 125 million in free cash flow. And that's on $650 million worth of assets that we own. We're probably the largest single private owner of minerals that we know of in the United States. By next year, I think we'll cross over $1 billion owned by ourselves and about 1,700 clients. It is a system that works because it's so fundamentally simple. Simple. Real estate, billion-dollar tenants, cash every month, no risk. That couldn't be better.
I love it. I love it. So I love that you covered the risks, and it just brought this one thing up. And I don't remember if it was 80s or 90s, but there was a guy back a long time ago that made a car that ran on water. You remember that? Was that the 90s?
It was like in the 80s.
80s.
They never found his body.
Right. I have to imagine somehow he was floating down the Hudson the wrong way. I mean, so is that one of the risk mitigation strategies? I don't know, but I'm just saying, if they have the technology to make cars run on water, that's a risk. But for some reason they had it back in the 80s, but we haven't heard about it until I think recently. They might have a Porsche or something that they were testing like that. But I just thought that was funny.
To be candid with you, we do need alternative energy. I mean, and the reason I say that is, look, we live in a sensitive planet. I think all this nonsense about the climate's a bunch of BS. I think that the Native Americans had it correctly. You move as the weather moves. You move as the earth rotates on a different sphere. And the buffalo are here today and they're gone tomorrow. And the water's here today and it's gone tomorrow. We're hard-headed, arrogant individuals. We go put our flag down and say, I'm living in Las Vegas where there's no water and I'm pissed off. I can't water my yard. You're in a desert, dummy. You started off in a desert. It doesn't get better. In our case, there is geopolitical risk, okay? The majority of the world's oil, other than 13 million barrels in the United States, all that oil comes from some of the most hostile countries on the planet. If you don't think geopolitical risk is out there, you're nuts.